Hello there, how's it going? So right now we're just quickly gonna look at some of the trends that we should not miss in the coming year. And right now I'm looking at the American dollar, and this is the weekly chart, as you can see. And what we're looking at is a currency that has been going down for such a long time. As you can see here, let me see what exactly is going on at the moment. So here we are actually looking at a downward trend that was broken, and it was broken in favor of the upside. So currently what we're seeing is that this pair is actually going to the upside. So it has some upward momentum from everything that we can actually see on this chart and at this time. So this was a downtrend that was broken on the weekly chart, and the price has been moving up since. So when we're looking at what is likely to happen next year, what we should consider is this previous price movement of this price breaking this area. So when this happened, it meant that we automatically turned bullish, and this is what has been happening over the past couple of months. So here we're going to look at some important areas of support and resistance, and here this area right here is supposed to hold this area up to this point here. And this is actually a stronger area because you have this price flip, you have this price action, you have this holding, and you also have this being the trend line that's being broken if prices to come to the low side. So this is what we'll be looking at if that is actually going to be a possibility in the coming year. So we're looking at a weekly chart at the moment, a weekly chart of the dollar, and everything, of course, is of interest to us. And what we're seeing now is also that we have this pattern that has been formed on this chart, and this is going to be a major trend on the American dollar that you have to be in if you want to catch some awesome and amazing trades, because whichever direction this pattern breaks into, you're going to be looking to capitalize on the movement from this area or even this lower area to go to the upside. So we're going to be seeing some momentum that will emerge from this particular trade. And the one thing that you should take note of is the fact that these areas, when they break, when these areas break, the take profit is usually always conveniently located in an area that is symmetrical to this zone over here. So if price moves up, then we're going to see that this area here is going to be the resistance, and we're going to be looking at the dollar coming to this type of area. So following the economic trends and the fundamental news, we see that the Federal Reserve has been on a quest to cool down the American economy because the prices have been really high. So everything that has been happening on the surface of the American economy is affecting the dollar and everything that is being traded at the moment. So right now we're looking at the S&P 500, and we're seeing that we have this interesting area here that should hold or should break. Whatever the case is, we have a trend line that was broken, and we have another trend line that is being tested at the moment. So if price is going to come to this area, we want to see a confirmation of a breakdown in price, and this is going to go hand in hand with what the American dollar is going to be doing, because we're looking at the American economy. So historically we see that we've been in a very, very strong uptrend. So this trend line is likely to hold if it's going to be respected, and if this trend line is to actually dismantle. The moment we are in this territory behind this trend line, it means that we are in a bearish market. And the market could come to any of these areas here, could even come to this area here, 180, if it breaks this trend line. So in the event that the market actually doesn't break the trend line, it means that the price is going to hold at that area and respect this trend line and continue to go up. And we'll have to see the confirmation of the trade from these heights so that we can actually confirm that the trend is up, because it could also not break this area but stay in a range. But when it does break this area, we want it to also break these areas that were already broken. So some of these areas are going to be very key in telling us what is going to happen. So this is something of an area that you must look at if price does hold to the upside, because this is an area of the break, and this is also an area where the supply was found in terms of this American economy. So we'll be looking primarily at the dollar and at all of the stocks, because whatever is going to affect one is going to affect the other. So if it breaks to the downside, what we're looking at is also a movement that comes to these lows. So probably in this type of area here, where we have a price flip, if the price does come down. But what the Fed has been trying to do has been increasing interest rates systematically. So when they're increasing interest rates, it means that they want this to happen. They want the price to go, they want the currency of the dollar to go up, because money was cheap all of these years here. Money was so cheap, and the Fed has been raising rates. So when you see this type of movement, what you're actually acknowledging is the fact that the interest rates are going to affect a lot of what's happening in the economy. So just to be able to actually make this setup tradable, you have to be aware of this fact that this area here is actually an area of resistance. As you can see that in the past, this area was holding the fort down. So when we're looking at this chart, we see that according to all of the price action, this was a zone where price came and it at some point made this area a pivot, right? But this area was taken out by these areas here. So you're always looking at these as fights, or the fights of the bears and the bulls, right? So what happened in this area is that there was some interesting price action, interesting fights, that at some point we saw this Pinocchio nose and thought that perhaps price is going to go down, but it actually didn't, because it was in the mood of causing carnage and disaster. So with all of these factors here, we were able to make some trades. That's last year, that's in 2018. So we're able to make some trades based on this breaking here. And we saw that the price broke, right? But it actually didn't come to pull back and retest this area. So we're likely to see something of a retest, because price is moving up, and at some point it has to come down. So if it comes down, we'll see what happens at these zones, because we have this area over here. So with these areas, what will be happening is that this will be a power struggle between the bulls and the bears, right? So when this level was broken in its own right here, it formed this type of action here, because this is a certain type of a trend line that you could also be aware of, because price could actually come here and bounce here at these areas. But on the large scale, what we'll be looking for is a break of this area. So if price is going to be strong enough, it has to confirm this break. And when it does, I'm going to update this page here on TradingView. If it breaks to the upside as the Fed wants it to do, it has to come back here and retest it, because this is going to confirm the actual movement. So it's not about us just being in the market. It's not about us just placing orders and just letting them look at us in the face, but it is about us having economic reasons why we're entering trades, and also understanding the landscape in which we are under, because all of these things are moving in ranges. So the dollar has an explosive move that it is been cocking up on for the past long time. So this has started since January, since this whole year, this price has been going up. So what happens is that there are yearly trends. So this was a yearly trend. You see that our low here was in February, and our high here, this is for December, the 17th, we had this high. So since January, February, so this entire movement was one breath of the market. So what we could see is that price could come back down, right? Retest the area. That's a possibility, or it'll just continue in the area of least resistance. So here we're already at a trend line. So we don't want to see this trend line break before our eyes and confirm the break without us taking action. So what we're going to be seeing on the larger time frame is exactly what we're actually discussing at this moment. So so let's just use this very useful tool here. So if we look at this tool here, we're looking using the Fibonacci here. So I just put it in this way so that I can also see the extensions. So when we're using the Fibonacci tool, what we see is that if price is to come back to the lows here, this will be actually the golden ratio. So the golden ratio is this area, 6.618. So this area is the golden ratio where this golden box is. So if price is to come here and do some things here, we know that it has to be accountable, because we're looking at this low and we're looking at this high. So if it comes back here, it will retrace to this area. But it could also come as low as this 38.2 here. So this is also another possibility that we're looking at. But we're looking at price action, and of course everything is going to be updated as it unfolds in 2019. So another thing that we are going to be looking at is a break of this area, perhaps a bounce at the 127. But here we see that this area here aligns perfectly with the 1.618, which is a golden ratio. So this is the golden ratio again, 0.618. So this is an extension of this golden ratio. So this is what we're looking at when we're trading using the Fibonacci tool. So this is very important in us understanding what is going to be happening in the coming year. And if you are actually in tune with the video that I sent on the pitchfork, we're also going to be using this to track the price and all of the momentum. So this is a pitchfork, right? And what we're seeing, we found the middle zone, we found the high and the low, the previous middle, the high and the low. And this is an easy way to use it. And you see that this trend line came here, it bounced here. So this was going to be able to tell you how to take this initial trade if you had placed this when you saw the middle, the high and the low. This is the quickest way you can find a trend. This is no joke. This is not even a selling point. This is the quickest way to find a trend. So you see that in this area here, we're actually experiencing the high of this structure. So if the market structure breaks at this level, it also is confirmed by the median line tool, which is a break of the upper resistance. So if this happens, then price is going to have to confirm itself and make it all the way there. But it's also going to be a trade that people who understand how to use the median line tool for trading will be able to harness the power of. So If this breakdown occurs, we're also going to be looking at something interesting happening where? At the golden ratio. So this area is going to be very, very key in determining what's going to happen in the market in the coming year. And this is what we're looking at the current moment. So we're going to be using this in conjunction with what we are actually seeing in the global markets, because of course everything that we are doing is based on the global trends in the international markets, and I mean everything. So we're also going to be looking at this area over here, but first of all we're going to see what happens at this very interesting spot. So the price here started collapsing on we could say like the first bearish sign was on the 24th of September 2018. Actually, this was on the 21st of September. And if you're interested in more of this, you can look for a video on my channel that says trading the stock market crash of 2018, and this video is going to show you exactly how this trade was found, and how you can find these trades in the coming future. So just stay tuned with the market, and I'll see you very soon. All the best in your trading.